Today is Thursday, December the 12th, and look at the headlines. In this corner, weighing 263 pounds, wet behind the ears, we have the President Donald Trump, who hasn't yet given his approval to the trade deal, which is not expected to be particularly good for the United States, but may be good for the market, and will be just the distraction he's looking for as he undergoes impeachment next week. So, we also have the UK election, which looks like it's going to be a majority for Boris Johnson, but it hasn't been decided yet. And then we have the market with not extraordinary, but exceptionally high volume in the Dow and the NASDAQ and the S&P 500. We had this big pop at the beginning when Trump said he was very close to a deal. And then, of course, the algorithms that trade on Donald Trump tweets stopped buying. The smart people came in and started selling because we've heard this song before. And then this afternoon, just before Trump went into a meeting, or while he was in a meeting with his aides at 2:30 talking about the China deal. I guess it might not have been that great because he hasn't come out and said anything about it yet. The market picked up a little bit to end up with advancers and decliners 2-to-1, which brings our market breadth indicator to a little bit of a higher high versus this one, but not yet up to this point. So the money moving into the market typically goes to the overbought area, and occasionally it goes beyond that, as we saw at the beginning of this year, but that was after a major oversold. When it goes oversold, it can go oversold by a lot. 1, 2, 3, 4, 5, 6 times. When it goes overbought, in that same period of time, it's only gone up twice. So this time, pending a China trade deal, we're going to see money moving into the market up to the overbought area, and then money will start moving out of the market, and we'll start the whole cycle all over again. The S&P 500 was still up 27 points today, and the VIX took a major nosedive because there's no fear now if there's going to be a China deal, right? Right. And the market reached an all-time high. So the current high was with this green line. We now have a new current high, so we can take this line and we can move it up there, and that's our new current high. And we have hit what? How interesting. We have hit the top of and then pulled back this trend line that has its base in 1994. And we were caught in this wedge. So let's go back to 1994, and to do that we have to go back to a monthly chart. But let's get rid of this SMI for a second, and then let's look at this chart. So there's 1994, and that was our base. And we took this line and we drew a 1, 2, 3, and then 4, 5, 6, 7 hits. And now we have exceeded the 1994 one, but we've run into the trend line that is 2016, which has a bottom here, a bottom here, several bottoms here, tops here, 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 and here we are again. So let's see if we can move out of this mirrored wedge. And tomorrow is going to be an important day, obviously. But this weekend is going to be an important weekend as people digest just exactly what the China trade deal was, because the NAFTA 2.1 trade deal doesn't appear to be all that much better than the NAFTA that we had before. The only thing that it seems to have provided is that a certain percentage of the cars coming out of Mexico have to be made by people making, I don't know, some number of dollars per hour, which is certainly far less than what the automotive workers are making here. So is that going to mean more jobs for auto workers in the United States? Your guess is as good as mine. Apple, up $1.26 to create a new closing high, so we can take that closing high and we can move it up to here. And we now have a new closing high for Apple. And we have successfully now pulled away from the 138.2% line after having failed to do that for a number of days. But now we've had 2 days in a row. We came down to retest the 138.2% today, found support there, and then moved up. Let's take a look at the volume for Apple, and we can see that it was pretty large. There's institutional buying taking place there because that's what it takes to move above the 20-day moving average. And since beginning of December, we've had 3 days that have been buying by institutions and 1 day of institutions were involved in the selling. So it looks like more upside ahead for Apple. Caterpillar, big break for Caterpillar, but of course the China trade deal is going to be big news for China. If it takes off tariffs on heavy equipment, that will definitely help Caterpillar. But I'm not sure if it's the bellwether that we thought it was in the past. When you go past construction sites now, do you see a lot of Caterpillar or do you see a lot of Korean brands of earth-moving equipment? It's not all yellow Caterpillar like it used to be. Home Depot managed to squeeze 6 cents up, but still got rejected by the 200 EMA, but support on the 200 SMA. Now these are the indicators that we're following, and we've seen that the long-term, the slower-moving SMI has plateaued, and the faster-moving SMI has actually started to dip. So we need to keep a close eye on that. Right now, my Home Depot spreads, and I've only got 3 contracts, are losing $190. But at one point, I was losing $490. I now have 2 sets of Apple verticals. I have 5 of the February 270, 275, and I have 5 of the January 275, 280. And they aren't making too much money yet, but it's the type of trade that's going to take a while, and we'll be slow in reaching our potential. But I think it's a pretty safe bet right now, and you all know that I don't like making a lot of trades when the market is at a high. AT&T up today, 24 cents. Love this stock. Pulled back from where? From the 68.1% Fibonacci. So Fibonacci's are as important to overlay on your charts as clouds are, because you can see the support from the cloud back here at the end of October, and then a lot of resistance before it finally broke free, came back to test the cloud and the 50 EMA at the same time. Next day, tested the cloud, and now we have a move off of the cloud, and the Chiku span, however, is underneath the 8 EMA and is running into resistance in this area up here. I still have short 38 calls, some that expire next week, some that expire in January, and I feel good with those. I will roll them. By the way, Caterpillar yesterday declared a dividend, which goes ex-dividend on January the 17th for $1.03. That is quite a nice quarterly dividend. WDC up 288. Look at that bounce, and that would be good for the chip stocks. Where did it stop? It stopped at 2 places, the 38.2 Fibonacci and the 50 simple moving average. When 2 things like that coincide, and you have a third, which is the Chiku span hitting the bottom of this candle, that's just too much technicals for the algorithms to ignore and the technical traders to ignore, and we had to stop there. So we really need WDC to open up tomorrow if you're holding, but the Chiku span will run into this 200, so let's put a little note here. So when we do our video tomorrow, we'll be reminded to take a look at that 200 and Chiku span interface. And we also need to take a look at how we do over this 50 SMA, because we blasted today through the 50 EMA, the 200 EMA, and the 50 SMA proved to be resistance. We're also running into a cloud, and as time goes by, resistance judged by the depth of the cloud is going to be more significant. The last time we touched the cloud with WDC was October the 31st, and it proved to be a strong selling day. And you can just see what happened there, crash. But look at the number, look at the volume here. Today's volume was a little bit above. That's institutional buying, but we saw across the market that the volume was up in all three of the markets that we track. And Amazon is in the cloud, stopping at the 50 SMA. Chiku span still has some room to run, and the top of the cloud right here would correspond with the Chiku span hitting the cloud. Let's see, how many days out? 2 days out. So Monday, the Chiku span would hit the top of the cloud. It could hit the top of the cloud tomorrow, but that would coincide with the candle hitting the top of the cloud, or span B here on the inverted cloud. So 11 minutes, that's about enough time for me to keep you. Where are we going tomorrow? I believe that this trend line is going to prove to be resistance in a normal day, but if it turns out to be a really good deal for America in phase one of the China deal, and there's any daylight on a phase two, we could be going higher, but that's what we need to look for.